You know, big box stores are getting aggressive this holiday season, with Best Buy apparently announcing plans to match online prices, something they hadn't done before. They used to match brick-and-mortar stores to brick-and-mortar stores, but not the clicks. Walmart already saying this week that it is going to test same-day delivery service in some markets, but will any of it beat back the trend of internet shopping? Joining me now, Dan Binder, Managing Director at Jefferies. He's the analyst who just upgraded Walmart from a hold to a buy, and CNBC contributor Stacy Widlitz is also with us. Mr. Binder, what did you see in Walmart that caused you now to think that the stock is a buy, not just a hold? It's run up a lot this year.
Yeah, it has run up, and it's reflected some of the turnaround that the company has shown thus far. I think what we really saw at this year's analyst meeting was that the company has a lot of irons in the fire to really keep this comp store sales story going beyond just lapping easy negative comparisons a year ago. As we start to lap the more positive comps a year ago, I think they've done a lot of things from a merchandising perspective that will propel the story to the next phase of the turnaround. A lot of that is centered around product content, quality. It's not just about adding back SKUs and lowering price. I think you got to go a bit further. They figured that out, and they're backing it up with strong marketing, and they're getting I think they're getting traction with that.
It's a $76 a share stock right now. Do you have a price target on it, and how soon?
We have an $88 12-month price target. It assumes about 16 times our out-year number, which is above consensus. And if we look across retail, there's a lot of large-cap liquid names that are being very richly valued. I think we could start to see some money flowing out of those into Walmart, which is still actually near its multi-year low PE.
Stacy, I'll come back to you in just a moment, Mr. Binder. Stacy, let's talk a little bit. That's Walmart on the line there, Dan. Stacy, let's talk a little bit about Best Buy and this idea that they're now going to price match online competitors, something they hadn't done before. How is this going to help them? It's certainly going to hurt their margins.
It is. You know, consumer sentiment was soaring today, and why not? We're going to get all sorts of free stuff once again for the holidays. And Best Buy's a good example here. They're talking about matching online pricing. They're talking about if they're out of stock in the stores, that they're going to send it free to you, no shipping charge. But, you know, the bottom line is it hurts the bottom line. We saw the same thing last year. You know, as products get commoditized and retailers feel the need to gain market share and start throwing freebies in, it hurts gross margins, and that's the story.
But Stacy, how can a store call itself Best Buy if it isn't?
Well, that's a good question. But I think, you know, they have no choice right now. They're losing share. Walmart's getting very aggressive. They said they're ramping up orders in terms of their iPads and their tablets. So certainly Best Buy has to do something to get in the game here. So they're really going out there and saying, all right, we'll give the customer a freebie. We'll match online pricing. We really need that share back.
I want to get both of you to talk a little bit about showrooming. We did a survey last year in which we indicated that about 25% of consumers actually say they have used their cell phone to go in and price compare in a store. How big an issue is it, Mr. Binder, for the Best Buys and the Walmarts? I mean, I can't imagine that people are going into Walmart and using their scanners on a box of detergent, but maybe on electronics.
Well, I got to tell you, I think it is a real phenomenon. I think some retailers downplay it a little bit. But quite frankly, if you were doing those price checks at Walmart, I think you'd find that they're actually pretty competitive with a lot of the online retailers. Take a look at soap.com at some point versus the household chemical pricing at Walmart. Walmart's cheaper. So I think they're actually in a pretty good position from a price perspective to compete. I think Best Buy, on the other hand, has not been historically. They're drawing a line in the sand. They're trying to protect that market share. And as Stacy pointed out, it is not going to be good for bottom line.
Who knew there was a place called soap.com, Dan? That's great, man. You just educated. What do you think of Best Buy stock, Dan? Do you have a rating on it, a price target?
Yeah, we have a hold rating. I think it's going to be a very binary outcome based on what's happening in the stock today. You have former chairman Dick Schultz, who's pursuing perhaps a buyout. If that does not happen, I think you're going to see the stock drift lower. If it does happen, obviously, there'll be a premium priced in pretty quickly.
Stacy, do you have very quickly investment position on Best Buy?
I'm negative on Best Buy as well. I think, as Dan pointed out, the likelihood of a buyout here it always can happen, but I think more the likelihood is that the company stays public.
Right.
You see margin keeps declining.
Yep.
You see sales flat at best, and the stock continues to languish.
Stacy, Dan Bender, thank you very much.